Okay, let's talk about opening doors.
Sure.
Getting that car you need, finding a good place to live, maybe just getting better deals on financial stuff.
Right.
There's one key thing that often decides if those doors open smoothly, isn't there?
Yeah, your credit score, it's a bit like a financial passport, really.
That's a great way to put it, a financial passport.
Exactly. And just like a real passport, a good score doesn't just get you in, it affects the terms you get. We're talking potentially saving thousands, literally thousands, from better interest rates.
Huge difference. Okay, so that's exactly why we're diving deep today. Our goal, our mission, if you like, is to pull out actionable steps for building a strong score, especially if you're, starting from zero. That passport feels pretty blank right now. We've looked at info from the Consumer Financial Protection Bureau, the CFPB, and the scoring folks at MyFICO, plus some really practical tips.
Yeah, and we want to get beyond just saying credit is important. We want to give you clear steps, things you can actually do, point out the traps to avoid, and, just give you that confidence.
Right, build that solid foundation.
Yeah.
Okay, so we get why the passport matters. Let's get specific. Where does a good score really, tangibly make a difference day to day?
Well, a really common one is getting a car loan, good credit. That usually means more options and, crucially, lower interest rates. Even a tiny rate difference saves you a lot over the loan's life.
Yeah, those percentages add up fast.
They really do. And renting an apartment. Landlords almost always run credit checks. It's kind of their way of guessing if you'll pay rent reliably.
Makes sense from their side, needing that reassurance.
Totally. And then the big one, buying a home. A good score is often, non-negotiable for getting a mortgage approved in the first place.
Money.
Plus, it massively impacts your mortgage rate. We're talking tens, maybe even hundreds of thousands saved over 30 years. It's huge.
Wow.
And even beyond those big things, it means better credit card deals, lower interest, higher limits, maybe better rewards. It really just props up your whole financial health long term.
So good credit isn't just about borrowing. It's borrowing smarter, saving money. Okay, let's peel back the layer then. What actually makes this score? What are the building blocks?
Right, understanding this is key. So FICO scores, that stands for Fair Isaac Corporation, by the way, and they're the most common ones lenders use. They look at 5 main things. The absolute biggest one, payment history.
Okay.
It's simple, really. Do you pay your bills on time? Every time. That's what lenders care about most. It predicts future reliability better than anything else.
Paying what you owe when you owe it. No surprise. That's number one. Okay, what's next?
Second big one is the amount owed. This isn't just how much you owe, but how much you owe compared to your total available credit. It's called your credit utilization ratio.
Ah, right, the percentage thing.
Exactly. You want to keep that percentage low. Definitely below 30%, ideally even lower. Maxing out cards, that seriously hurts your score.
So it shows you're not, living right on the edge of your credit limits all the time. Responsible management.
Precisely. Third factor, length of your credit history. Basically, the longer you've managed credit well, the better it looks. Shows consistency.
Like building a reputation, right?
Yeah.
The longer you've been trustworthy, the more people trust you.
That's a great analogy. Yep. Then there's credit mix. This is about having different types of credit, things like credit cards, maybe an installment loan like a car loan or student loan, perhaps a mortgage eventually.
So a variety.
Yeah, a variety can be a plus. It shows you can handle different kinds of debt. But, this is important, don't go taking out loans you don't need just to get a mix. It's not the most critical factor.
Okay, good clarification. So don't force it. And the last one.
The last one is new credit. Opening a bunch of new accounts really quickly can look risky to lenders.
Why is that?
Well, it might suggest you're suddenly taking on more debt than you can handle, or maybe you're in some financial trouble and scrambling for credit. Either way, it's a bit of a caution flag.
Got it. So 5 key things. Payment history, amounts owed, length of history, credit mix, and new credit. Okay, so for listeners starting from scratch, maybe with no history at all, what are some actual practical ways to start building?
Great question. There are 3 main paths, really. First, look into getting a starter credit card.
Yeah.
These are made for people with limited or no credit. Think student credit cards if you're a student, or secured credit cards.
Secured cards.
Yeah.
That's where you put down a deposit, right?
Exactly. You give them a security deposit, usually a few $100s, and that typically becomes your credit limit. It makes it way less risky for the bank or card issuer.
Ah, so the deposit acts like collateral.
Pretty much. And here's the really important tip. Whichever card you get, use it for small, regular things you'd buy anyway, like maybe your phone bill or streaming service, small stuff.
Okay.
And then this is absolutely crucial. Pay the entire balance off every single month. Don't carry a balance. This avoids interest, and it proves you're using credit responsibly. Builds that positive payment history.
Small charges, paid in full every month.
Mm.
Sounds doable. Okay, what's strategy number 2?
Second way is becoming an authorized user on someone else's card.
How does that work?
You need someone, maybe a parent or a trusted friend, who already has good credit and a card with a long positive history. They add you to their account as an authorized user.
So you get a card with your name on it for their account.
Yep. And the good part is that account's positive payment history can then start showing up on your credit report. You kind of piggyback on their good habits to start building your own history.
That sounds like a potentially great shortcut, but yeah, you definitely need someone you trust and who trusts you, right? Because they're still on the hook for the bill.
Absolutely. Trust is key. They're ultimately responsible. But if you have that relationship, it can be a really good boost when you're starting out.
Makes sense. Great option if it's available. What's the third main way then?
The third route is using credit builder tools. Some banks, credit unions, even some apps offer these. Often they're called credit builder loans.
Credit builder loans. How are they different?
Well, it's kind of interesting. You technically borrow a small amount, say $500 or $1,000, but often that money is held in a locked savings account.
Okay.
Then you make regular monthly payments on that loan over maybe 6 or 12 months. Those payments get reported to the credit bureaus, just like any loan payment.
Ah, I see.
Once you've paid it all back, they release the original loan amount to you, sometimes plus a bit of interest you earned. So you're essentially proving you can make payments without actually taking on immediate debt risk.
That's pretty clever. It's like a forced savings plan that also builds your credit history.
Yeah.
Okay, those are 3 solid ways to start. Now let's flip it. What should people absolutely not do? What are the big mistakes?
Yeah, knowing what not to do is just as important. Top of the list. Don't max out your credit cards. We talked about utilization, keep it low. High balances really drag down your score.
That signals risk.
Definitely. Second, and honestly, this might be the worst one, missing payments. Even one late payment can seriously hurt, especially early on. Payment history is king, remember, so pay everything on time. Always.
Those 2 feel like the absolute basics. Keep balances low, pay on time. Any other major pitfalls?
Yep. Another one is taking out loans you don't need or opening tons of cards quickly just because you think it'll build credit faster. It often doesn't work that way and can actually look bad, like we mentioned, with new credit.
So be purposeful, not just greedy for credit lines.
Exactly. And one last thing. Try not to close your very first credit card too soon, even if you get better cards later.
Oh. Why's that?
Because keeping that oldest account open helps lengthen your average credit history age. Closing it can actually shorten your history and potentially dip your score a bit. Just keep it open, maybe use it once in a while for a small purchase to keep it active, and pay it off.
Interesting. So that first card has long-term value for your history length. Good to know. Okay, we've covered building, avoiding mistakes. What if listeners want to learn more, find really reliable info? Where should they go?
Yeah, great point. The Consumer Financial Protection Bureau, the CFPB, is fantastic. It's a U.S. government agency, so the info is unbiased, clear, and covers tons of money topics, especially credit reports and scores.
CFPB.gov.
Yep, CFPB.gov. They have an Ask CFPB section, which is super helpful for specific questions. Really solid resource.
Okay, government-backed, reliable, good. Anywhere else?
Also, MyFICO mentions this too. Look into nonprofit credit counseling agencies. There are certified counselors out there who can help with budgeting, managing debt, and really understanding your credit situation personally.
And these are often free or low cost, right?
Often, yes. Especially the initial consultations. They can give you tailored advice if you're feeling overwhelmed or just want a personalized plan. Definitely worth looking into if you need more guidance.
So help is available. That's really good to hear.
It really is. Look, building good credit, it's a marathon, not a sprint, you know?
Yeah.
It takes time, consistent effort, building those good habits we talked about.
Yeah. Small steps consistently.
Exactly. But starting now, even with those small steps, you're laying that groundwork for your future, for financial well-being, for those opportunities down the road.
Absolutely. Don't think of it as a chore, maybe. Think of it as like empowering yourself to reach your goals, that car, that home, whatever it is. So maybe think about it. What's one small thing, just one action you can take this week? Maybe it's just researching secured cards online.
Or checking your credit report for the first time.
Or even just setting up an automatic payment for a bill you sometimes forget. Just one step. Start building that brighter financial future.
And speaking of taking control of your finances.
Yeah, definitely join us next time on The Deep Dive.
Yeah.
We're going to tackle something I think a lot of people grapple with. The top 3 money traps that honestly keep people broke. You won't want to miss that one.